What if I told you that recently a bank was fined a record-breaking fine of $3.09 billion? Yes, this is one of the biggest financial fraud settlements in United States history. So let's understand what exactly went wrong and how ignorance of regulations led to these conditions. TD Bank, initially started in Toronto, Canada, is one of the largest financial institutions in North America, with assets totaling over $1.9 trillion and a presence in 15 states across the United States. Known for its comprehensive banking services, TD offers retail, commercial, and corporate banking, alongside wealth management and insurance. With millions of customers, TD ranks among the top 10 banks in North America, priding itself on accessibility, with over 1,200 branches in the United States alone. However, behind its success lay serious internal issues, as its systems failed to detect criminal money laundering activities, leading to one of the largest fines in banking history. The story of TD Bank's involvement in a massive money laundering scandal begins in the mid-2010s, during a period of rapid expansion. Between 2014 and 2023, TD aggressively pushed to grow its footprint, particularly in the United States market, but its systems struggled to keep up with the demands of this rapid growth. In this frenzy, TD Bank overlooked critical compliance issues, particularly in relation to anti-money laundering regulations. Federal investigations would later reveal that these gaps allowed international criminals, including drug cartels, to funnel hundreds of millions of dollars through TD's systems unchecked. As TD's growth accelerated, its compliance infrastructure did not. This imbalance allowed criminal organizations to exploit the bank's weak internal controls. Federal prosecutors discovered that over several years, TD Bank had allowed illegal transactions to go undetected, with enormous amounts of money being laundered through their systems. Despite these red flags, internal and external audits showed that TD repeatedly failed to address the growing risk. Management's focus remained on expanding market share, not fixing the underlying weaknesses in its compliance mechanisms. The true scope of the issue came to light in a Department of Justice investigation. By 2023, it was clear that TD Bank had violated the Bank Secrecy Act, a United States law requiring banks to detect and report suspicious activities related to money laundering. Instead of flagging unusual transactions, TD Bank ignored or delayed filing mandatory suspicious activity reports, allowing criminal enterprises to move their funds undetected. The financial penalty imposed on TD Bank was massive. In October 2024, the bank agreed to pay a record-breaking fine of $3.09 billion to United States authorities. This settlement was the largest ever for money laundering violations and served as a stern warning to other financial institutions. But more than just the financial hit, TD Bank was forced to admit in court that it had failed in its obligations, pleading guilty to conspiracy to commit money laundering, a rare and humiliating admission for such a large bank. What made this case even more significant was the nature of the funds being laundered. Federal investigators linked the money to organized crime syndicates and drug cartels, further illustrating the global ramifications of TD Bank's compliance failures. The criminals who used TD Bank's services weren't small-time operators. They were major players in the drug trade, moving hundreds of millions of dollars, perhaps over $1 billion, through the bank's flawed systems. To put this into perspective, while TD Bank's fine was an eye-popping $3 billion, the total amount of illicit funds that flowed through its systems could easily dwarf that number. Although the exact figures are not fully known, the scope of the criminal activity points to hundreds of millions in illegal money laundering operations. These funds likely fueled a wide range of criminal enterprises, including drug trafficking, arms dealing, and human smuggling, activities that would have serious real-world consequences. The fallout for TD Bank extended far beyond the financial hit. The scandal severely damaged its reputation. Shareholders, regulators, and customers alike began questioning how such a large, sophisticated bank could allow this to happen. The United States government also imposed significant restrictions on TD Bank's ability to grow its United States operations until it could prove it had reformed its anti-money laundering procedures. This restriction, combined with the lingering stain of the guilty plea, would make it more difficult for TD Bank to regain the trust of the markets and its customers. Moreover, this case highlighted broader concerns about the banking industry's ability to manage the risks posed by rapid growth. As TD Bank expanded its business, it allowed profits and market share to overshadow its legal and ethical responsibilities. The bank's failure to maintain effective anti-money laundering controls showed that no institution, no matter how large or established, is immune to the risks of complacency. In the aftermath, TD Bank was forced to take significant corrective actions. It pledged to overhaul its compliance framework, update its systems, and increase staffing in its compliance department. The bank also faced increased oversight by regulators, who would be watching closely to ensure that the reforms were implemented effectively. However, these measures came too late to undo the damage that had already been done. The TD Bank money laundering scandal is a stark reminder of the heavy responsibility that financial institutions bear in safeguarding the integrity of the global financial system. By turning a blind eye to obvious red flags, TD allowed criminal networks to thrive, enabling them to launder vast sums of money and carry out their illegal operations. While the $3 billion fine was intended to send a message, the true cost of this scandal, criminal enterprises, and the damage to TD Bank's reputation will be felt for years to come. In conclusion, TD Bank's failure to prevent money laundering on such a massive scale shows the dangers of prioritizing growth over compliance. The $3 billion fine represents just a fraction of the illegal money that was allowed to flow through the bank's systems, and the case has set a precedent for how seriously regulators will treat future violations. For TD Bank, the road to recovery will be long and fraught with challenges as it seeks to rebuild trust and repair the damage done to its reputation. If you want to be updated with such business news and high-quality documentaries, don't forget to like, share, and subscribe to the channel.